Traditional versus alternative assets. What's the difference? What are they? Can you invest in them with an IRA? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. On today's AdBits, I'm going to explore the difference between traditional and alternative assets. So it's actually quite an easy distinction. Essentially, alternative assets refers to any investments that fall outside of the traditional asset classes, commonly accessed by investors, like stocks, bonds, cash investments, ETFs, mutual funds. In sum, traditional investments I would categorize as equity-based, like mutual funds, ETFs, bonds, and cash investments. That's it. That is what essentially 90 to 93% of Americans are invested in. Traditional investments, the stocks, the mutual funds, the ETFs, bonds, and cash investments. That's what you get when you go to Merrill Lynch or Fidelity or Schwab or Vanguard, TD Ameritrade, or any of the major banks and financial institutions. That's what they deal in. They deal in traditional investments. Okay, and traditional investments do well. If you look at the S&P 500 for the last 100 years, average close to 10%. So nothing wrong with traditional investments. I own stocks, I own mutual funds, I own ETFs. I'm all about diversification, but I also invest in alternative assets. And alternative assets is essentially everything other than those categories, i.e. stocks, mutual funds, ETFs, bonds, and cash investments. So real estate or loans or private placements or private stock, cryptocurrency, precious metals, private equity, hedge funds, venture capital funds, all those types of investments. Generally, the characteristics are they're not publicly traded, or they're a tangible asset like gold or silver or palladium or coins, or they're an intangible digital asset like cryptos, or there's some type of private investment, whether it's in an equity fund, a venture capital fund, hedge fund, real estate funds, business that's not publicly traded, and of course, any type of note or hard money loan that's not associated or offered by a publicly traded company. So that's it. The world of alternative assets is growing. Let me tell you, when I started IRA Financial in 2010, alternative assets were seen as kind of like out there, risky, like grunge music back in the 90s, like Nirvana, Pearl Jam, like, hey, like that's kind of a little bit out there, a little bit risque. I don't know if you want to be doing real estate or lending people money in your IRA or buying gold or, oh my God, investing in private businesses, pre-IPO businesses. That's crazy stuff. That was the case back in 2000s up to around 2014 or 15. So when I started, when I told people that I was letting IRA owners invest in alternative assets, I remember people I used to work with in New York City, big law firms are like, you can do that? That's crazy. Like, why would you want to do that? You should just buy stocks, mutual funds. Like, who needs to deal with real estate or gold or private businesses? Like, who has time and energy for that stuff? Just buy your regular old investments, traditional stuff, so much better. That's fine. That's the beauty of America. You get the choice. You have freedom. And the tax code basically says there's only 3 things you can't do with an IRA. Can't buy life insurance, can't buy collectibles like art. There is a carve out for precious metals. IRS approved bullion, 0.99% gold, silver, palladium, American Eagle, state minted coins, bullion coins, but they must be held in the physical possession of a depository, i.e. you can't hold them personally. Okay, so that's important. And then thirdly, under Internal Revenue Code section 4975, you cannot engage in any transaction with your IRA that in any way directly or indirectly personally benefits you or other disqualified persons, which are essentially lineal descendants, parents, children, spouse, daughter-in-law, son-in-law, or any entities controlled by such persons. Okay, so you can't buy a house and live in it, or can't buy your wife or your husband a Rolex watch, or can't take your kids to Disney, okay, or buy yourself a boat. The investment needs to benefit the IRA. So the IRA can buy Tesla stock. It also can invest in a startup, so long as all the returns go back to the IRA and that you're not personally 50% or more owner of that startup, for example. So there's a lot of stuff you can do. Okay. And every year there's more stuff, whether it's NFTs, cryptos, or other types of investments, Forex, commodities, foreign currencies, obviously all the stuff I mentioned before, real estate, commercial, residential, domestic, international, private equity, hedge funds, investment fund, private placement, so much you can do. Okay. And the idea is, hey, the IRS understands the power of diversification. That's why they let you do investments in alternative assets. They could stop it, right? We know 529 plans for college, they only let you do traditional investments. Can't do real estate, can't do alts. So they have the ability to limit it. When ERISA was created in 1974, which founded the IRA, they certainly could have limited the investment choices for IRAs. They didn't. Why? They understand the power of diversification. And so should you. The idea is that, hey, don't put all your eggs in one basket, right? Have different investments that are allocated for your IRA, so you can balance any losses from one category with gains from the other. And real estate's a great hedge, right? Whether it's against inflation, it's a hard asset, and also as a source of security against a volatile equity market. Some people think cryptos are hedged, but they haven't proved to be so far in 2022. Gold has been, right? Gold's pretty much the only, I would say it's proved to be this year specifically the only asset that's seen value increase from comparing to equities. Yeah, real estate's gone up as well, but that could be tempered now with rising interest rates. But gold has held up well in 2022. So bottom line is the difference between traditional alternatives are pretty simple, right? Besides equities, mutual funds, ETFs, cash, bonds, everything else is alternative. We now know that IRAs can do alternative asset investments, just can't buy life insurance, collectibles, or prohibited transactions, essentially self-dealing, conflict of interest transactions that personally benefit you or a disqualified person instead of exclusively 100% benefiting the IRA. And then, of course, the powers of using alternative assets is diversification, hedge against inflation, investing in a hard asset, and also something I should add, some people just feel more comfortable investing in something they know, like real estate. I can't tell you how many people said, hey, Adam, I just feel better like driving down the street and seeing the house I own in my IRA and knowing each month I'm getting a tenant that's going to stroke me a check for X dollars. Even if the market sucks, someone is going to live there. People need a place to stay. And yeah, even if I have to lower my rent a little bit, I got cash flow. And ultimately that asset will go up. I don't care right now. I'm 40 or 50. I have 5-10 years to worry about the value of my IRA, but I like the cash flow. I like it's a hard asset. I don't have to worry about Russia or Ukraine or what's going to happen in Sweden or Finland joining NATO and all this China and Taiwan. I don't need to deal with this stuff. I know I have a house in X state where people want to live, and I know there's going to be cash flow, and I can always sell the real estate and I can touch it. I don't have to worry about anyone social engineering me and potentially stealing that. I know it's a hard asset and I feel safe, and that's fair. And that's some of the advantages of using alternative asset or investing. I'm certainly not telling people to take their retirement money and invest in alternative assets. It's not the point of this podcast. I'm just a tax lawyer. I'm not a financial advisor. I'm not an investment advisor. All I can tell you is what clients have done and what I've done, and diversification has paid off. It lets me sleep well at night. I know my assets are in varied investments, and some go up and some go down, but at least they don't all go down together and they're not all going to zero together. So having real estate's been actually a really source of comfort for me. Yeah, I know last year or so, I was like, God, I should have put all my money in Tesla stock or Facebook or Google, but I didn't. Over the last several years, I bought a bunch of real estate, and now I'm happy I have it. So I think there's real power in investing in traditional and alternative assets. Again, some people feel more comfortable doing only traditional. Some feel comfortable with a balance. Some feel comfortable just doing alternatives. It's your power. You're the fiduciary of your IRA. You're in charge of your IRA. There's no 401k fiduciaries here. It's not like an employer plan where your employer has some fiduciary responsibility. No, it's you. That's why it's a self-directed plan. It's your IRA. It's for you. It's for your family. Yes, you want to be cautious. You want to be diligent. Investing all your money in cryptos is probably not a great idea. Investing all your money in a startup, probably not a great idea. But maybe putting 2% in cryptos, or maybe 3% in private placements, or maybe 15% in real estate, or 10% in precious metals. That's something to consider, and those options are available to you. So, I think it's a powerful tool that more and more Americans are starting to think about and starting to use as part of their retirement savings strategies. And that's the whole point of the podcast, bringing all this out, educating people, and giving you the choice to make your own investment decisions. So thanks for listening. If you're watching on YouTube, thank you as well. Don't forget to check out my 2 other podcasts, Adam Talks, which drops each Wednesday, and Ad Mail, which drops every Thursday, which goes through 3 of the best self-directed retirement questions of the week. So don't forget to check those out. Otherwise, have an amazing week, and talk to everyone again next week. Take care.